Good morning, good afternoon, good evening from wherever you're watching me from. Welcome back to the channel, everybody. In our previous video, we discussed about how to find forex trades and to trade daily. And we discussed how you can trade the forex market using the breakout continuation trading strategy. In this video, I'm going to show you more examples of some of the trades I've taken to expand more of your understanding of how to trade this particular strategy. Also, to widen your view on different setups and different variations you're going to see anytime you're searching for the market. Without wasting my time, let's continue with this example. So we all know the breakout continuation trading strategy. If you don't know the rules, let me recap here. To be able to trade a breakout continuation trading strategy, you must first identify a trending market. You must identify a trending market. And what's a trending market? A trending market is a market that's moving with higher highs and lower lows, right? Can you see? Higher highs, you have a lower high here, higher high. That's a trending market. And we know that traditionally market moves this way, but that's not the only way market can also move. Okay, market can also move this way. It makes higher high, retrace, makes some retracement here, break out of the retracement, and then when the market comes down, it continues. So this is the breakout continuation strategy we learn in this channel. So to be able to trade this strategy, you must first identify a trending market. The market must be trending first. And how do you know the market is trending? You plot your moving averages, 200, 50, and 20 moving averages. If all these moving averages are sloping to one direction, then the market is trending. And let me repeat again. Moving averages does not tell you when to buy or when to sell. Okay, they don't tell you that. They don't tell you. They cannot pinpoint the exact moment you have to buy, you have to sell. They're just there to show you the direction of the trend. So the indicator is just to help you. So you plot this your moving averages on the chart, help you to identify the trend. Okay. So you must first identify a trending market. So we know that this particular market is trending, right? The next point you have to look for is what? Support areas. So you can see support, and there are support areas here. So when the market breaks out of this support area, you look for bullish engulfing pattern. Okay, when it breaks out, wait for market to retrace and gives you bullish engulfing pattern, and then you take the trade. This example trade I showed in the previous video. Let me show you one more trade I took with some profit for you to also grasp the understanding of the whole concept. Okay, so you also be able to identify these same setups and trade and make some profit in the market. So identify the trending market, search for support areas, and when there's a breakout from support areas, when it retraces and gives you bullish engulfing pattern, you take your trade. So let's go to the next slide and let me show you the trade I took and the profit I made. So the breakout continuing trading strategy can be traded on H4, H1, and M15. Okay, but I don't prefer H4 because H4 is too long for the candles to form, and as day traders we don't have the patience to wait for candles to form on H4 time frame. Okay, so basically I trade on the H1 and I trade on M15 time frame. Okay, so how do you find this trade to trade? So before you trade, you must make sure that your currency strength meter is aligned with your trade. Okay, so on the currency strength meter, what did I say? This is what? CAD yen trade. Okay, Canadian yen, and I traded it on M15 time frame. Can you see? So CAD yen trade, I traded it on M15 time frame. And on the currency strength meter, you can see that the Canadian dollar was strong. Can you see? It was very strong, and the yen, Japanese yen, was very weak. So I merged the strongest with the weakest. Okay, so you go to the chart, search for Canadian dollar with the Japanese yen, and notice that the market will be on an uptrend. So on an uptrend, what do you look for? Look for support areas. Okay, this is a screenshot I took before my trade got executed. But there was a support area here. So if I identify support areas, okay, so identify support when there's a breakout from the support zone, and then when the market retreats back, you take your trade up. Okay, so on this particular chart, on this particular day that I took this trade, there was support zone here at this area, support zone, and when the market retraces back, it gave me a bullish engulfing pattern. Can you see? Gave me a bullish engulfing pattern, but this bullish engulfing pattern was too high. I couldn't afford to buy here. When I buy here, my stop loss has to be somewhere here. I didn't want a very larger stop loss. I want a tight stop loss, so I have to wait. So I waited for the market to retrace a while, and then I placed my buy order here. So when the market retraced, it logged me in, and then it was just about to hit my take profit, and I snapped for you just for you to see. So for you to be able to identify this trade, first search for trending market or check your currency strength meter. which currency is strong and which currency is weak, and then you merge them. So when you merge the stronger currency with the weakest currency, then you get the chance, you get more probability on your side. Okay, it's likely that the market is going to go up. So you set for a trend market, identify support areas when there's a breakout from support zone, and then when market comes back to that support zone, you take your trade. When it gives you bullish engulfing pattern, you take your trade. Can you see the bullish engulfing pattern? So I took my trade and I made, I think it was about $840 from this trade. My risk was I think was $400, and my profit target was $840. $840. It's very difficult to write the amount, forgive me. $840. So always when you are taking a trade, okay, risk only 1% of your capital, or 2%, or maybe 3% maximum. Okay, don't risk more. My capital is not that big, so I can risk $400. It's not that very big. Okay, it's not like a hedge fund. I'm just a day trader who trades in the house. So you risk $400 to make $800, or you can risk $200 to make $400, or you can risk $300 to make $600. Okay, make sure you always get twice of what you are risking. Okay, that's risk reward. Your risk reward must always work. If your risk reward is very low, you can become profitable. Okay, so to become a profitable trader, your win rate must be high and your risk reward must also be high. Okay, if these things cannot collaborate with each other, then you cannot become profitable. So forex trading is very easy if you know what you're doing, but if you don't know what you're doing, it can be very difficult for you to make profit. So when you wake up in the morning, all what you have to do is that open your currency strength meter, search for the weakest currency and merge it with the strongest currency. Then you identify your pattern. Okay? Identify your pattern, and then when market retraces back to the zone and gives you bullish engulfing pattern as I got here, you put your buy order there and you take the market up. Very simple. Some of the trades may win, some of the trades may lose. I'll also show you some examples of some losing trades later. But most of the time, you are going to have winning trades, and your risk reward being higher, definitely you're going to make a profitable trader at the end of the month. Okay, so forex trading is very easy if you have an idea of what you're doing, but if you have no skill, you have no knowledge of what you're doing, you'll not become profitable. Okay, so guys, it's very simple. Okay, if you don't understand anything from this video, go to some of our previous videos and watch the whole strategy, and then you can understand, and you can also trade as a profitable forex trader. Okay, don't waste your money in the market before you learn your lessons. Learn the right skills required before you put your money on the market. Don't waste your money and then later when you become profitable, you don't have enough capital to trade. Okay, many people make the same mistake. Don't repeat the same mistake. Okay, so this will be the end of this video. I just show you this trade I took so that you also look at this setup, and one day when you get this same setup, you'll be able to trade it. Okay, so that will be all for this video. Like, share and subscribe, and see you in the next video.